The price of gold has hit another new all-time record high. It's done that over the last few weeks continuously. And it's interesting to ask the question, where now and what's driving it? Let's catch up with John Meyer from SP Angel, a mining analyst, who is with us with more on this rather than talking about the analytical side of it. Just a quick question about the price of gold and what is driving this new record high.
We believe this is all being driven by central bank buying. Central banks, I think, are struggling to know where to park their money, and it's their responsibility generally to defend the currencies which they act for. So if you're not sure you want to buy US dollars, and you're not sure you want to buy Japanese yen or Swiss francs, where do you go? So gold is a very good alternative currency, and I think this is what's lifting prices, and this is lifting prices well beyond where most people would have forecast. And actually, as a result, we're seeing sales of ETFs, probably, although we hear that funds are generally investing back into gold. I think they're coming in through futures. We see the futures price leading spot higher, which is quite interesting news. But we do see net ETF sales, which means that there's some profit taking also going on, probably by smaller investors.
Which states are most responsible, if you like, for the buying of gold, do you see?
China, number one, followed by Russia, and a whole bunch of other countries behind. So it's not just these two big groups buying gold. We know that for many years they've had an agenda. They want to undermine the US dollar. They'd like to develop their own currency bloc because the US dollar is the world's functional trading currency. Mm-hmm. And they've been trying to get away, certain groups have been trying to get away from that for some years because the US derives enormous benefit from it. Now, I don't think they're about to break the dominance of the US dollar, but definitely more and more trade is happening between Russia and China. That doesn't normally happen within US dollar trading, I think. In fact, the Americans, or Janet Yellen, is threatening now to sanction Chinese banks that help the Russian war effort. So there may be some of that coming in. But we're also concerned that perhaps the Chinese currency is under pressure, and maybe there's going to be some devaluation there.
Well, certainly if you look at the dollar against the Chinese yuan, it's quite obvious you can see the trend that's there with the weakness of the Chinese currency. But the Chinese economy is in a bit of a dark place relative to where we would normally see it. It still talks about growth, it still talks about a fully functioning economy, but we do hear a lot of problems, especially in the property sector. How do you read what's going on in China under the covers?
Well, Fitch has just downgraded China in terms of its sovereign debt rating and pointed out that actually its debt to GDP ratio is going higher in its view. We know the Chinese authorities are struggling to manage local authority debt levels. This is the kind of off-balance sheet type stuff, and that had been developing for years and years and years. They've now said that if local authorities want to raise more money, they've got that can only be used for certain purposes, and so they're trying to bring a bit more law and order into it all. At the same time, yes, the property sector is in a very dark place in China. Property prices still coming down. Many Chinese savers still holding back. They're being very cautious about what they do with their cash. Because remember, they don't have a healthcare system the way we do. They have to save for a rainy day. Imagine if we were saved for a rainy day in this country, because we have plenty of those. But no, in China, yesterday we saw news that for the first time a Chinese state bank had actually put a property developer into bankruptcy in Hong Kong. So that's China Inc. saying you've got to pay us first before you pay anyone else, and presumably overseas investors are going to lose out as a result of that. We know because of US policies, there's a lot of investment that used to go into China to develop manufacturing for components and various things is being reshored back into the US. That's making life a bit tougher for the Chinese. And as a result, we have seen Chinese intervention, quite strong Chinese intervention, to support their currency. And it's quite possible they may be considering letting it slip.
Yeah, and in fact, just on that point, we've just been hearing about Apple, who've just they've been offshoring, haven't they, to India, which of course is all part of that same story. You talk about Russia as well as a state buyer of gold on the evidence you have. Very different sort of set of circumstances. Of course, Russia is funding a war in Ukraine. One hopes that it's not going to accelerate in terms of its meaningful impact on the region through various forms of missiles it wants or looks ready to fire. What are your thoughts on what's happening in Russia? Is that something that we should be aware of in terms of the price of gold, or is that sort of a bit of a sideshow compared to everything else that's going on?
Well, they are seen as a buyer, but I think it is a bit of a sideshow. The Russian economy is not significant anymore. Okay, what it's able to produce and sell to itself is weaponry. I think even the Russian defense industry is hugely damaged by the lack of performance by its army, and that's fortunate for everybody else. But countries that used to buy Russian military kit probably not buying it anymore.
You talk about gold ETFs. I'm an investor in a gold ETF. It's done far better than my investments in gold companies, which is interesting, gold producers, which has astounded me, really. As a mining analyst and SP Angel, you cover a lot of mining companies specifically in gold. How are you seeing this work out for individual companies? Because it certainly seems to me that companies aren't seem to be benefiting from this rise in the price that we've seen.
Copper prices have been held back in a kind of recessionary environment. They haven't kept pace with inflation at all. It's now playing catch up. Yes, that'll be demand led to some degree, but also China Inc. is buying gold and copper, as far as we can see. The Chinese State Reserve Bureau, which acts for the government, it's a big buyer, and we think it's a big buyer at the moment as well. But that's partly as a store of value and partly to support its industry going forwards. And because they've got such a large expansion in the electric vehicle manufacturing space, they know they're going to need a lot more copper for that. They invested very heavily in copper smelting, but the problem is they can't get hold of copper concentrates to run the smelters. If you can't get the copper concentrates, you can't produce the copper. So they're now having to buy copper, better refined copper from elsewhere in the world, and that's drawing in supplies, and therefore we see that in the marketplace.
Just going back to the price we've seen in the last 6 months when it was below 8,000, there were a lot of mines then that clearly were not going to be economic. But as the price rises, it does bring in more mines. What's the balance between supply and demand at the moment for copper? Because we have again spoken about this before, and the fears were that there might come into be some sort of imbalance. How are we in terms of being able to supply that demand?
We don't think the supply side of the copper market is that elastic. In fact, we think higher prices are not going to create that much new demand. Yes, there'll be some more scrap that comes into the market. That's very labour intensive. Remember, labour costs have gone up a lot in the Western world. But the mines, they've been running as hard as they can. And the big expansions that we saw in Chile and Zambia some years ago, I think they're very difficult to repeat. In fact, those mines have got older, the grades have gone down. If anything, we're seeing lower production numbers coming out of Chile. In fact, BHP Billiton has just overtaken Codelco as the world's largest copper producer. So good for BHP, but not good for the government of Chile, which runs Codelco. And I think that's symptomatic of these big mines that are slightly underinvested, really starting. They just can't keep up with the pace that they've been running at. And we haven't had any really big new mines for a while. I mean, the last one was First Quantum Minerals mine in Panama. And the Panamanian government has shut that mine for all sorts of reasons, some of which we don't quite understand. And that's causing part of the problem in the copper concentrate market. But I don't think that's about to reopen in a hurry. And even if it does reopen, I still think there's going to be a market deficit in copper.
The background to all this is high interest rates, of course, have been twisting the markets. What are your thoughts on that fundamental backdrop? Where do you see interest rates going, and what sort of effect could a drop in interest rates that we've got? I think some people are sorting out possibly 75 basis points of Fed cuts this year. What sort of effect is that going to have on the price of copper and gold?
Well, higher interest rates keep the US dollar strong. In that environment, that tends to suppress metals prices, because metals are bought by people all over the world in all sorts of currencies. But it's a funny old world at the moment, that the US economy is running at quite a strong pace. And in fact, they've got a huge electrification program going on. And we were writing this morning about the recabling of a lot of US infrastructure. We know that US infrastructure is old. It needs a refresh. and it looks like they're going to do a lot of recabling, and that's going to require a lot more aluminium, a lot more copper, and they're getting ready to move more into electric vehicles. I know the American people like their big trucks, and they're very wedded to the internal combustion engine, but actually as battery technology gets better, as power density in batteries improves, and the head of Stellantis said they expect, they require batteries to be half the weight that they are. But what will really happen is they'll actually have twice the size of battery, giving you twice the range. Now, this is all good news from a metals perspective. It's also very good news for consumers, because actually driving will become cheaper on a per mile basis. And in fact, I think with all this Chinese competition in the market, the cost of buying vehicles will also become cheaper as well. These big price increases that we were seeing for electric vehicles has now reversed. And consumers, I think, will benefit hugely from this. And there seems to be a flood of Chinese electric vehicles coming into Europe, many of which seem to be stuck at port at the moment. But sooner or later, those vehicles will come out and they will be on sale at discount prices, because nobody will be quite sure whether they want to buy a Chinese car or not. But sooner or later, there'll be a price point at which you say, OK, I'll have one of those.
OK, John, we'll leave it there, but thanks indeed for joining us. It's John Meyer from SP Angel talking about the two big moves in the metals markets at the moment, record highs for the price of gold, and those recent gains for copper.